One UK minister is trying to nudge young investors into stocks as opposed to crypto, and he says invest in Britain, not just crypto. And so in this video, we're going to look at why Bim Afolami is urging young investors to shift from crypto to stocks like NatWest. Today's episode is sponsored by Cake Wallet, where you can send, receive, and even exchange your crypto right from within the wallet. Cake Wallet is open source and non-custodial, so you control your own private keys, available today on iOS, macOS, Android, and Linux. And StealthEX, a privacy-centric crypto exchange which enables you to make crypto-to-crypto exchanges anonymously. Good evening everybody, and a warm welcome again back to Enter Crypto with me, Chris Kenyon. Now today we're going to be talking about a guy called Bim Afolami. He's a UK City Minister and he is trying to nudge young investors from crypto into stocks. And this is despite the UK facing a shrinking stock market with only 319 liquid stocks today, which falls short of all the other major markets out there. And so, as always, guys, let's quickly read through this article and then we'll comment after. So this shift is a response to the evolving dynamics of the UK stock market and the stringent regulations recently imposed on the crypto sector by the FCA. Afolami, in a recent interview, underscored the persistent enthusiasm among the youth to own assets. However, he noted a gap in their perception of traditional markets as viable platforms for investment. Afolami emphasised the need to diversify investment portfolios beyond digital assets. And he said, that's one of the things that I want to change, to say, don't just own crypto, own a share of NatWest, don't just own crypto. Invest with your savings through automatic enrolment, invest in Britain. Despite these pleas, market analysts predict that the number of crypto users in the UK will climb above 20 million in 2024. And the UK stock market currently faces challenges, with a notable contraction in the number of liquid stocks, as highlighted by SocGen's Andrew Lapthorne, and that there are only 319 UK stocks with a 6-month average daily trading volume of $1 million or more. This decline starkly contrasts with other major markets, underscoring the urgent need for rejuvenation. Lapthorne pointed to a broader trend of de-equitisation affecting the global market. The trends are not encouraging. Concurrently, the FCA's recent regulations on the crypto sector represent a major shift in the regulatory space, and these new rules categorise cryptocurrencies as restricted mass market investments, mandating rigorous compliance measures. The FCA claims that these rules aim to safeguard consumers from the volatile nature of digital assets. However, it has also drawn criticism for potentially stifling innovation and limiting consumer choices within the UK's crypto market. The juxtaposition of these two financial sectors presents a pivotal moment for investors, especially the younger demographic. Afolami's call to action is not just a suggestion, but a strategic move to stabilise and revitalise the UK's financial markets. His emphasis on investing in domestic stocks like NatWest is a clarion call for a balanced and diversified approach to investment, one that aligns with the nation's economic interests and offers more stable investments. The transition period in the UK's financial markets is a critical juncture, and it demands informed decision-making by investors guided by the evolving regulatory frameworks and market dynamics. So this guy is basically seeing a decline, him and others around him, that people, especially young people, are moving from stocks and traditional businesses and investing in businesses or UK businesses to crypto. And that's worrying for him, because he's trying to find a way now to reverse that trend, and it's going to be a very, very difficult challenge, in my opinion, because, well, for the one sole reason that crypto is global, it doesn't respect the borders of the UK, whereas businesses do. I know we've got obviously global businesses, but they do still respect the whatever jurisdiction it is that they're operating in. Bitcoin doesn't care. Bitcoin doesn't even. It's native to the internet, which just means that it's global by default. And now normally when you would have a business that sets up in the UK, even a small one or a big one, the business will have to adapt to the laws, and it will have to find a way to make it work and be profitable still. Sometimes that's not possible, and sometimes it goes out of business, or sometimes it doesn't even start up because the rewards are not there. There's too much risk, or could be for one reason or another. But with Bitcoin, the British government could create the most strictest rules they wanted and completely ban Bitcoin. But will it stop Bitcoin? No. it'll just go somewhere else. Bitcoin is a global, so it doesn't need the UK, just like it doesn't need France, it doesn't need Germany, it doesn't need, Japan. It doesn't need any of these. It'll just continue anyway. So it's actually the governments that are going to have to adapt to Bitcoin and crypto. And I know that sounds like a crazy thing to say, but that is the reality, because it's like gold. Gold doesn't care what, it's not issued by anybody. It's issued by the planet. You mine it out of the ground. It doesn't have any political affiliation. It's not issued by any government. And Bitcoin is exactly the same. It's decentralized. It doesn't get issued by anybody in particular. It gets issued by the protocol. And so now governments have to try and it's quite embarrassing, I think, for a lot of governments to say, well, what is this new thing? What we have to actually change? No. Everybody changes based on what rules we make. And so they're not used to this. And but they're going to have to get used to it, and it's going to have to be like that. And if they don't, people are going to move. People are going to move the money like they're doing now. Especially the younger generation are seeing that they can't afford a house. They can't afford the interest payments before they even apply for a mortgage or apply for credit to buy a house. They say, well, I'm going to be working a job. My wife's going to have to work a full-time job. When am I going to have time for the kids? What kind of life is this? And I'm still going to be in debt. And I've got loads of debt from university. I've got £100,000, £150,000 worth of debt around my neck that I've got to pay back. What is this? Is this living? This is rubbish, And the young are curious. And so they're thinking, well, is there any other options out there? And, we don't have to stay in England if we don't want to. We can move out. We've got options now. We've got competition between governments, especially ones offering tax-free statuses there. So people now have a lot of choice that they didn't have, say, even 50 years ago. And on top of that, the other thing about young people is they are risk takers. They are not as risk averse as the rest of us, the older generation and the generation above. They are quite happy if they believe in a particular crypto or stock or precious metal to put loads of their net worth. Because how bad can it be? If they keep it in the traditional stock market, or if they put it into a house or whatever it is, they're going to get into debt anyway. They're not going to be any better than they are now. And if anything, people, especially young people, have seen how people's lives are declining financially and everyone's getting poorer, that it's not even like it's bad now, but it might get better later. It's actually bad now, and it just looks like it's getting worse. So crypto just becomes so attractive. Bitcoin's got a limited supply. And it's limited circulating supply. It's also disinflationary, so we know every 4 years the halving comes. We know how much Bitcoin there'll be in the future at any given year or moment. And so it's like the opposite of fiat government currencies, where we never know what the inflation rate. Nobody knows in 10 years, 15 years, what the inflation rate will be in the UK for the pound or the EU for the euro. It's impossible to say. Nobody knows. But we know because we have a policy in Europe, the US, UK, basically every government, that we always aim for 2% inflation. We know that life's going to get more expensive. We know that already. We know that that's going to happen. So if you know that's going to happen, and you know that your savings are going to be eroded away by inflation over years and years, and you're young, and you've got a lot of years left on this planet, then you're going to look for alternatives, aren't you? Why would you want to engage in that system? That's a crappy system where you lose. And you're going to work, your savings are mounting up, but your savings are worth less over time. You don't want to be involved in that system. You want something that's better, especially if you plan on starting a family and you've got your kids. You've got a young family, or you've got just recently married or something like that. You've got a lot to think about for the future, and they start to question. And I think all this, with them being more into taking risks, more forward thinking and thinking of the future, because they've got more time left than everybody else. They've got maybe kids as well, which means they've got even more time to think about the future. It's just leading, and I think this is not a UK issue, by the way. This is everywhere, I think. So a really interesting article there. As always, guys, that's what I've got for today. Thank you for watching. Thank you for listening. Don't forget to like, subscribe, and click on that notifications bell so that you don't miss out on any future updates. And I'll see you all tomorrow evening. Take care.